But in the current instance here in 2023, gold is actually breaking upward. It's actually breaking out versus the long bond and entering what we can only call a new paradigm. And I don't use that phrase lightly. A new paradigm is literally when there has been no trading at a certain level in a relationship between two assets ever. I mean, this is the freely traded history of gold that we're looking at here versus bonds. Gold has never been worth this much versus bonds. And the thing is, when you see a breakout like that from what we could call a generational cup and handle pattern or a generational consolidation pattern, a market does not tend to just make a 1 to 2 point move higher after consolidating for 45 years and then breaking out. So
Welcome back to Soar Financially, everybody. Thank you so much for joining us. My name is Kai Hoffman. I'm the @JRMining guy on Twitter and the CEO of the Soar Financial Group. Really appreciate your time. We have a special guest joining us today. It's Christopher Aaron. He's the founder and chief analyst over at iGold Advisors, and he's somebody who tries to connect the philosophy of gold investing with the actual markets. Really, really interesting because when we're recording this on July 11th, he just put out an article 30 minutes ago saying, well, gold might hit a top in 2024. Isn't that spicy? All right, let's start there. I think that's a great topic to discuss. Christopher, thank you so much for joining us. First time on Soar Financially. We really appreciate your time. Thank you so much.
Hi, thank you so much for having me.
Yeah, absolutely. Yeah, you gave me some great cannon fodder there with that title that you just put out 30 minutes before we came together here. So let's dive right in, Christopher. Gold to market top in 2024 sounds a bit unbelievable based on what is going on in the world. Really, really want to know what's your line of thinking behind it. What's signaling a top for you in 2024?
Yeah, so, and please keep in mind, I'm not some sort of gold basher. In fact, my entire business is aligned with the precious metals, with the metals moving higher. I would make a heck of a lot more money if the metals move higher. But I cut my own teeth back in 2008 in that global financial crisis, where I myself agreed with and saw a lot of the problems with the financial system that a lot of the other analysts out there were discussing, the problems with the debt situation in the United States, the housing bubble that led to the global financial crisis. But I observed that these individuals who were only paying attention to the so-called fundamentals, that they were really blindsided by how gold and silver were clobbered alongside the stock market 2008, 2009. So I said to myself, I would never place my belief in the fundamentals foremost. I'm going to follow the market foremost and pay attention mostly to what the market is saying. So here, fast forward another decade, here we are, gold has basically doubled from its lows in 2015, 2016. That's very constructive to see. We have silver lagging somewhat, but the big signal that I'm talking about here that is setting up for, it looks like a top in the price of gold, is the underperformance in the mining sector. This signal has foreshadowed every significant top in gold when we go back to the 1970s, even all the way back to that cycle. Certainly when we look at the top that happened in 2008 and again in 2011 in the precious metals. So it's this situation where we have the price of gold continuing to make new peaks, but you have the gold mining equities moving flat, not reflecting the gains in the gold price. And I see well-meaning analysts giving every sort of reason, every sort of excuse as to why the gold miners are not reflecting the increase in the price of gold. People talk about increased labor costs, energy costs, input costs, et cetera, et cetera. But the one thing that tends to be the correct reason is why the miners are not reflecting the increase in the gold price here, basically since 2016. This is not a short signal that we've been observing. The main reason why this occurs when we look at these periods throughout history is that the sum of the investors in the gold mining industry are saying, we don't believe that this price of gold is going to last. We actually think that this is going to be coming back down at some point in the future. And so we've been observing this signal here with gold. I mean, it's been especially bad since the 2020 peak, but really this underperformance by the mining sector has been going on since 2016. The most challenging part of this thesis that's developing for, let's say, a top within the next 12 to 18 months is that when I look at the gold chart in isolation, gold itself still appears like it wants to make one more significant peak. It's very rare. I never want to use the word never, but it's very rare to see a market make a certain peak 3 times on a long-term chart, which is what gold has done. 2075 was hit in 2020, again in 2022, and again here recently in April of 2023. It would be very rare to see a long-term triple top in that way. And so it appears what gold wants to do is consolidate, and then there's going to be one more trigger coming, let's say, within the next year. This could be a geopolitical trigger. I wouldn't be surprised if it's somewhat related to the expansion of the war between Ukraine and Russia, but it could be an isolated monetary phenomenon as well. I think gold is going to make one more significant peak. It could even be quite dramatic. We could get up to 2,500, 2,800 gold. This could be really be an exciting time. But then I think that underperformance signal, that ominous signal that I was discussing in the article on Gold E that was published, I think that signal is going to rear its head, and we're going to be looking at the breakout that happens, whether it's this year or next year, and what could be still a dramatic move to the upside. We're going to be looking at that being a final top in the sector for perhaps a number of years.
Interesting approach, because I deal a lot with the miners, and sentiment has been bleak, as you said, since 2016. And it's always interesting because you try to come up with an excuse or a narrative that sort of fits my style, my narrative, right? So for me, I was always looking at competition for the miners. So where did the competition come from? Crypto, cannabis, and weed in Canada in particular, right? That sucked money out of the system. And I have the advantage. I run a data company called Orin Inc., where we track the money flow into the miners, the financings. And Fed funds rate hikes, like as soon as that started back in March or on March 16th last year, wallets of investors closed shut as well. Before then, they were quite excited to spend, right? So I'm trying to think, like, I'm trying to challenge you a little bit because it makes an interesting discussion, actually, and I really appreciate it. It's quite refreshing, actually, to have that discussion. Do you think the miners foreshadowing that is the sole reason? And why are the miners lagging? I think I just want to explore that maybe a bit more in detail to get to a sort of like in general, like trying to understand the macro to understand the micro better is the thesis of our channel here. Like, what are the miners doing the wrong way, or what is influencing the miners in a way besides just like there needs to be something else? Like, I'm trying to figure that one out, and I think it's an interesting discussion to be had.
I mean, all those points that you just made, Kai, are totally accurate, and I feel like those are playing in with this thesis here that the gold price is going to come back down at some point in the intermediate future here. I mean, the competition from the crypto miners, the competition from cryptocurrency in general, absolutely is playing in. We see this especially egregiously when we compare silver to the crypto industry, and more specifically the silver miners. If you think about the spectrum of the precious metals from sort of the least risk and the least reward on one side being physical gold, that's your rock, that's your anchor. And then if you think about the entire end of the spectrum, moving from the senior gold miners to then silver, physical silver, and then the senior silver miners, and then the junior silver miners, what I've noticed quite distinctly here, especially over just the last 2 years, is in weeks and even days, even day to day, when the cryptocurrencies are strong, you will see money coming out of the junior silver miners specifically, almost a direct inverse relationship between the crypto miners and the junior silver miners. And if you ask me, the junior silver miners are the most speculative, and I don't use that as a pejorative, but I use that as simply to say that those individuals who correctly understand the problems with the fiat system. I'm not saying there are no problems with the fiat system. I think central banks and fiat currency should be abolished. I would support going back to a gold standard, but that doesn't mean that I have to believe that the price of gold is actually going to keep rising in the real world that we live in. But back to the speculative end of the spectrum, I do notice that when the cryptos are strong and the crypto miners are strong, that seems to be when the junior silver miners are underperforming the most. So there's almost this direct relationship between capital being siphoned toward the crypto as the speculative anti-fiat type of investment thesis and away from precious metals. And I would expand that, to go back to the original topic here that we were discussing, I would expand that sort of siphoning off of capital even more to include the broader technology spectrum in general. The advent of artificial intelligence, companies like NVIDIA that are really moving right now based on speculation or real, whatever have you, thesis that artificial intelligence is the next significant wave. We see days where AI stocks and technology stocks are higher. We're seeing capital coming out, especially of the silver spectrum. So the gold and silver miners, especially the senior gold miners, in that collection of the underperformance on the gold price that we talked about a few minutes ago, are essentially saying, hey, with all these things that are happening in the world, with the progress that we are making as a civilization, let's say, that what is going to transpire as we get a little bit later on into this decade is that the main battle, if you will, in the global macro landscape is not going to be gold versus the US dollar. Yes, that battle is going to continue to exist as a store of wealth is needed in certain periods of time. But the even larger question that's happening at the same time is our growth and our expansion as a species, technologically, industrially, the progress and expansion of the world. So I don't think it's either or for those two questions. Both are happening at the same time, but the underperformance in the gold mining sector is a reflection that as we get into the later part of this decade, what's going to be more important is industry, industrial metals, industrial commodities, and the technology sector.
Now you brought up AI as well. Of course, that's a big money suck these days as well. Out of the mining markets in particular, we can see it here on a daily basis. I wrote one more point down. I just want to I want to move on in conversation, but one last thing that came to mind is the size of the markets and the type of investor in the gold mining space or in the silver mining space versus a gold investor per se. I think, especially like in recent months, actually, I think that I've been observing maybe through discussion as well that there's a divergence. There used to be a lot of overlap, but now, like I watch Bloomberg, all of a sudden mainstream is starting to use the word gold a bit more as a mix in the portfolio when they talk about, let's get some bonds. Yeah, let's get some high yielding bonds, but also let's get some gold, especially when poo-poo is going to hit the fan potentially later this year, as half the world sort of predicts to happen. So my question is, like, size of the markets. Is the gold mining investor market size still big enough to move the needle on the other end? Does that make sense, what I'm saying?
In other words, can the mining sector move the needle for gold itself?
Exactly, right? So I'm looking at that. It's just a thought that came along when you said, like, well, because I know the junior mining space is tiny. It's minuscule. Yeah. So if I try to extrapolate, of course, there's a few more investors in Newmont, Barrick, and the bigger companies. But it's still not a favorite sector, right? Like Newmont underperformed massively. They're at the bottom of the top 500 companies in the S&P. Yeah. Last I checked, they were 485th or something out of 500 companies, right, in performance. So the question is, like, is size, like, I'm just trying to, challenge you a bit because it's fun. Actually, I'm tremendously enjoying this conversation.
Absolutely.
So to see if that is of relevance.
I mean, I generally think it works the other way around. I generally think that it's the metal itself that moves, that is in the driver's seat. And then you have money flowing into the large caps, the mid tiers, and the juniors. However, there is this strange phenomenon that I come back to, which is that the miners tend to have this predictive power. Uh, so somehow the sum of the intelligence of mining investors is able to look at the metals themselves and say, hey, either this trajectory higher is sustainable or it's not. And so I see that happening. And if we could perhaps pull up one of these charts that we discussed a little bit earlier, I think this is a prime example of how there's two separate battles here that gold and the precious metals are fighting at the same time. And I think this is where a lot of the precious metals investors need to expand their vision a little bit, because most precious metals investors are thinking that the only battle on the street is between gold and the fiat regime. That is important. It is critically important. As I said, I'm a supporter of gold as a sound currency. But when we look at these two battles, so here's one. Here's the first battle that's happening. It's gold versus fiat U.S. government bonds. This is the bellwether of the bond spectrum, the 30-year U.S. bond going all the way back to the 1970s. And we're simply looking at it in a ratio here. So the price versus the bond. And you look at some of the peaks that were made in this ratio between gold and bonds. You look at the peak in 1980, up at that level near 15 on the ratio. I mean, and that peak up there represented a 20-year top in the price of gold when gold got to that level versus U.S. bonds. You look at the similar peak that was made in 2011. No coincidence that it was at a same value, plus or minus half a point there on the scale, that represented, in this case, a 5-year top in the price of gold. Gold declined from 2011 down to the low in 2015. Something interesting is happening here, though, over just the last couple of years, where what we actually see is, in this instance, with that final top that was made in 2022, a little back off after that. But in the current instance here in 2023, gold is actually breaking upward. It's actually breaking out versus the long bond and entering what we can only call a new paradigm. And I don't use that phrase lightly. A new paradigm is literally when there has been no trading at a certain level in a relationship between two assets ever. I mean, this is the freely traded history of gold that we're looking at here versus bonds. Gold has never been worth this much versus bonds. And the thing is, when you see a breakout like that from what we could call a generational cup and handle pattern or a generational consolidation pattern, a market does not tend to just make a 1 to 2 point move higher after consolidating for 45 years and then breaking out. So I have a target there listed at 27.5, which is based on a measurement of the entire depth of the pattern added on to the breakout point. In technical analysis, this is how we derive these targets. And I stick by that target until it's either proven to be correct or proven to be incorrect by a failure back below the breakout point. I see nothing to suggest that this pattern is going to fail. This is a major macro signal that is setting up here, which is telling me that in battle A, which is happening on the planet right now, gold versus bonds, gold versus fiat currency in general, gold is winning this battle. Gold is, in fact, probably going to rise when we compare it to interest-bearing assets, especially bonds in the United States and other Western developed countries. So there's going to be an environment of rising interest rates. In other words, the prices of the bonds are going to fall, and gold is going to hold up relatively better. And so I think this chart fits in with the picture of gold making one more significant high either later this year, 2024. It could extend into 2025. So it's very important to keep this chart in mind at all times. Gold is breaking out versus fiat bonds. But then if we can switch to that other look for a second, Kai, here we're looking at gold versus the Dow Jones Industrial Average. Same time scale going back to the late 1970s. The way to think about this battle is we're looking at the need for a store of wealth altogether versus the progress that we are all making as a species. I mean, we talked about a few of these things that are happening in the background. It's not just, we talked about this right before we got on air. It's not just artificial intelligence, although this is fascinating to see if it's going to result in an improved world or some sort of Terminator 2 type of scenario where the machines rise against us. I'm not smart enough to know about that, but I wonder about that. But there are other things happening too. I mean, we look at Elon Musk. It looks like within the next 10 years here or so, this gentleman is going to send human beings to the surface of Mars. If it's not within the next 10 years, certainly in our lifetimes, God willing, this will happen. You look at the fact that a person like that left South Africa, he left his homeland, and he came to the United States to start this enterprise, to build this, this endeavor. He has usurped NASA. He has usurped the European Space Agency, building a reusable rocket, whereas the entire model of rockets going back since the dawn of space exploration has been thrown out the window here, literally in just the last 5 to 7 years. It's progress as a species. We as a civilization, if you go back to the year 1990, we did not know about a single planet that existed outside of our own solar system. This is just 30 some odd years ago. You fast forward to today, based on our exploration, the new telescope that just went up, some of the deep images coming off the James Webb, we now know about 5,000 distinct planets that exist outside of the solar system. There's the possibility, not this year, not this decade, but there's the possibility within the next 50 or so years of sending, craft and rovers to some of these exoplanets, perhaps learning what's on the planet, perhaps mining minerals. This could be a reason why the mining industry appears to be in a slow decay type of scenario here on planet Earth. This could literally be reminiscent of how the world moved away. If you think about what would some of the valuations have been for whale oil companies back in the 1830s, these individuals who were getting on boats and shooting harpoons into whales, and they were saying, hey, for the last generation, this is the only form of oil that has existed. This is the only way that we've known how to extract oil from the earth. And you have some guy in Pennsylvania and Texas sticking a shovel into the ground and seeing oil come up. If you had your life invested in a certain model, whale oil harvesting, could you have predicted that 30 years in the future, that entire industry would vanish and we would be extracting oil and coal and natural gas from the ground when it has never been done before in the history of mankind? So I look at what's happening with technology, industry, as this is the upward expansion of us collectively as a species. This is going to require minerals. This is going to require energy. This is going to require technologies and commodities, lithium, cobalt, energy, uranium. This is going to require a host of raw materials as we expand as a species. And so just back to the gold argument, it's not enough to say we're only comparing gold to fiat currencies. That's not enough. If you're only doing that, you are hiding, you're pulling a wool over your head, and you're only looking at half of the battle that is going on in the macroeconomic landscape. It's also about the upward progression that we are making as a species that requires the technology, requires the raw materials, not only the monetary side of things.
Yeah, very very interesting comments you made there as well. Like my next question, of course, is now as investors, like how do we position ourselves? Like what do you recommend, or what are some of the ideas you want to share with our viewers?
We need to break it down into periods here. Going back to the analysis of gold, the gold miners, silver, I follow quite closely. So the precious metals, there appears to be one more significant window here in the current cycle, which began either at the low in 2015, or we could date this cycle all the way back to the low in 1999, when gold bottomed after the 20-year bear market. There appears to be one more significant move that is setting up. My best analysis says that that move is going to take gold somewhere into the region of $2,500. Could be later this year, could be 2024. This move could extend into 2025. Could it overshoot my target? Absolutely. Could this take gold up to 2,800? Sure. Could it undershoot my target? Yes, it could. So I think investors need to be following this quite closely. The history of final waves in precious metals cycles is that they tend to be the most dramatic, and they actually tend to see the most dramatic moves in the mining sector and in the junior mining sector. You look at the final wave that occurred in the 1970s, basically from late 1978 up to the peak in 1980 in gold. That's when silver had its move from 5 to 50. A lot of the gold and silver miners went up by 10x in that last year and 6 months. And so I think there's the possibility, I never use the word guarantee in the markets, but I think there is the possibility for the final wave to see quite a dramatic reversion in sentiment, as basically everyone who's been ignoring this market for the last 7 or 8 years says, wow, gold is making a new all-time high. Let's get in. And you see quite a movement in from the mainstream investor. I think there's the potential for that. I think after that move happens, we need to be very, very careful that we pay attention to the macro landscape and don't automatically assume that just because gold has broken out to 2,500, that means that it's then going to go to 3,000 or 5,000 or 10,000. So I think when we get into that scenario, investors will be wanting to look at the macro landscape, consider taking profits off the table, considering initiating defensive strategies, and then saying, hey, what else is happening in the world here? What are some of the innovators in industry and technology? What are they doing? What are some of the things that we have all missed over the last decade that are happening simultaneously that may be the themes to last into the middle part of this century? Can we imagine if these themes take that long to play out? So I think we have this wave setting up. We have the potential for this wave setting up over the next 18 months. And then we really want to see what else is happening in the wider world and not be so narrow-minded that we only can think about the precious metals. We must expand our vision.
No, absolutely. Like you got to look outside. In Germany, you say außerhalb des Tellerrands is like outside is like. What's the English saying? I'm wondering. Is like you got to broaden your horizons, pretty much. You got to get off the beaten path and look around. Is sort of another euphemism for that. I think it's a little different, but the looking glass. There's something with looking glass. I'm trying to think of it. It's late in the evening here in Germany. I've had a long day. I'm missing words. It's been good though.
You're excused. You're excused, Kai. But it's exactly what we're talking about. Yeah, and the time to start doing that, especially if one of the theses that I'm really leaning toward is that the final wave in gold is going to be sparked not by a monetary phenomenon. We see expectations of the Federal Reserve cutting interest rates. We see that lessened. We see the dot plots flattening out here. It appears that any sort of cutting of interest rates is going to be less significant than the market was pricing in, even if we go back 6 months ago. So I'm increasingly leaning toward the thesis that it is going to be a geopolitical type of event that causes gold to break out. We talked about perhaps an expansion of the war. Perhaps it's something involving China and Taiwan. Perhaps it's something that even I can't think about. I mean, that's the definition of a black swan. It's something that one cannot fathom in the moment. But if indeed it is some sort of geopolitical based spike on gold, that would explain the underperformance that we've seen in the gold mining complex. If there's going to be a world war, let's say a tactical nuclear weapon that is blown off that gets people to fear for a world war, that may be why gold could spike several $100s in a relatively short amount of time. But is that the time to be investing in a new mining enterprise? We can consider that. The point that I was trying to make is the time to start broadening your horizons, looking at other commodities, looking at what's happening in the technology world, space exploration, underseas exploration. The time to start doing that is now, before the top. You don't want to wait till this moment in time. Let's say we get a geopolitical price spike in gold. Let's say we wake up and gold is at 2,300 overnight because someone detonates a tactical nuclear weapon. And from there, it surges another $100 higher the next day, and it's 2,500 before we can speak. You don't want to be waiting to that moment to decide when are you going to take profits off the table. When are you going to consider your next scenario as an investor? You want to be doing it at the time.
Absolutely. No, I appreciate your insights there, Christopher, and really appreciate your time as well. Where can we find more of you, Christopher?
Website is iGoldadvisor.com, and you can find me on Twitter. The handle is at the letter I Global Gold. Two best ways to reach me.
Fantastic. We'll put that in the description below as well, and really appreciate your insights. It was an interesting, engaging discussion here. Really appreciate that. Thank you so much for coming on, and to everybody else. We hope you enjoyed this discussion as well. I did, because I always like looking at fresh perspectives. Doing a lot of interviews, it gets a bit tiresome, to be honest, to always talk about the same thing. So I always appreciate a fresh approach, a different angle maybe to the same topic, but looking at it differently, because that way you tick all the boxes and you get to build a better holistic approach. We hope this helps you make better investment decisions. If it does, there's a subscribe button. It says subscribe on it. Smash that like button as well. Leave a comment. What do you think is happening? What are some of the trends you're seeing in the markets, let's say outside of gold? Christopher was talking about technological advances, either in deep space, deep sea, or just on the AI front. Let us know what you're seeing as well. We want to have that discussion. It's fun to have. Thank you so much for tuning in. Don't forget to subscribe. We'll be back with lots more.